I'm going to go through a list of my favorite RWA crypto tokens. Last week, I talked about decentralized finance, 8 small cap ones you might want to take a look at. I'll put a link to that video down below. Today, we're going to talk about real world assets. Now, I split them into basically 3 categories. The analogy being roads, cars, and mechanics. Let me explain. A road would be a layer 1. It provides the infrastructure or the rails on which to build. Then the cars are on the roads. Those are the companies that are actually tokenizing something, not just providing the infrastructure, but they're actually creating tokens of specific things, whether it be commodities or treasuries, you name it, real estate, that sort of thing. Lastly is the category I would call the mechanics. Those that help work on the cars, provide ancillary services like oracles that bring data on chain, such as current asset prices. We're going to break them into those 3 categories. I'm going to talk about 5 of my favorites. I'll go through them fairly quickly. And at the end, I'm going to give you what I would call maybe a wild card one that I think might do very well. Of course, all crypto is risky. That leads me into my disclaimer. I'm a big dumb animal. Don't do what I do. Informational purposes only. If you would, take a look down below, like, subscribe so you see my new videos. There's a join button if you want to help support the channel. And at the end, I'm going to talk about my school community. You can join the school community. I have Monday through Friday daily market updates, constant discussions about various crypto, and I teach classes on everything Web3 and crypto. Let's jump in here. Whether it be on CoinMarketCap or CoinGecko, 2 of the most popular free sites for listing cryptos, you can find the categories for real world assets. In there will be everything. They don't break them down really in terms of things like the infrastructure versus the tokenization versus the mechanics. So that's what we're going to do. First one, only one that I'm going to put in the category of roads. And why? Because from what I've seen, pretty much every layer 1 says you can tokenize real world assets on our layer 1. Of course. But then they're also generic enough that they're really there to be used across multiple industries. So the only one that I like and consider specific to real world assets and DeFi is Plume. Plume is at almost a 200 million market cap when I'm recording, fully diluted value, almost $1 billion. If we take a look at the Plume site, they're a specialized, I guess what you call like a modular layer 1 specific for RWA and DeFi, 5 billion assets in the pipeline, ecosystem partners, you name it. That's the only one that I've picked specifically in the RWA category. So when I take my investments, I organize them by industry. So I might say, yeah, Ethereum's for RWA, Hedera's for RWA, AVAX, and I can go down a list, but I put them all in my layer 1 investment category. I put Plume, even though it's a layer 1, in the category of RWA. All right, the next one, and we're going to have 3 in what I call the car category. This is the meat and potatoes of RWA. These are the companies that are actually tokenizing assets. That's ultimately what we care about because I love to debank. And when I can start taking and tokenizing my assets and moving them onto different chains and using them as collateral, the whole world's going to open up. And I want all of that financial control in my hands, not the hands of banks. That world is coming to an end. Ondo. Ondo is huge in terms of market cap, 3 billion. Fully diluted, 10 billion. Why would I bring them up? I still think they're going to have huge gains. First mover advantage matters if barriers to entry are high. So they've been around for a while. They tokenized treasuries and they've done an excellent job. If you're not familiar, you may not be if you're younger, but if you're my age or older, as we get older, financial advisors will tell you things like, hey, don't take as much risk. Try to get some yield, but try not to put your assets at risk because you're old and you probably don't want to go back to the workforce once you retire. So treasuries are very popular because they're backed by the U.S. government. And you might say the government's in a ton of debt. Who cares? Well, the U.S. government is probably considered most likely to pay back its debts than anyone else. So even the best of the worst is still the best. They came up with the Omni chain, a network for RWAs. And they go into why and why they created it, but they're creating an infrastructure so that you can tokenize all sorts of things. And what's interesting, I mentioned barriers to entry and why first mover advantage matters. If there's not a lot of barriers to entry, then it doesn't matter if you've got to jump on everyone else. But to me, they talk about incompatibility with DeFi. DeFi wasn't made for RWA, cross-chain liquidity, high transaction fees, bridging, protocol security. But here's the one that jumps out at me. Regulatory concerns, institutional regulatory concerns, regulations. If you've ever owned your own business, or even if you haven't, the amount of regulations, the amount of paperwork, the amount of agencies you have to work with, you might hire one person out of state and you got to deal with 5 different agencies for all kinds of different fees you have to pay. It's absurd. And this is amplified to an exponential degree when you're talking about things like public securities, stocks on chain. So to me, regulatory issues are one of the biggest issues when it comes to tokenizing things like securities. So I think Ondo, even though it's such a large market cap, is still going to do great things. And I'll talk about pricing on all of these at the end. Next up is Maple, one of my favorite names because their token is syrup. It's maple syrup. That's funny. They have tokenized institutional credit and loans. So instead of the retail stuff, like the car loans and the mortgages and whatnot, this is for businesses. This is for institutions. It is a gigantic market, as you can probably imagine. 500 million market cap, only 500 million fully diluted value. I'm a big fan of Maple. 3.3 billion under management, and they're actually tokenizing assets. To me, they're going to do very well. I consider that to be a small to mid market cap size. Small is probably like in the 50 million, but 500 million, I think they have a lot of upside. Next is Clearpool, 150 million market cap, 200 million fully diluted. Institutional lending, powering real world credit for trading firms and financial institutions. Those are big markets. That's big money with an extensive network of KYC'd borrowers. If you're not familiar, KYC means know your customer. And that makes a difference, obviously, when you're talking about things like using treasuries or whatever it may be, tokenized assets as collateral. So in the world of the tokenized assets, I tried to grab a large, mid, and a small. We've got Ondo around 10 billion. We've got Maple around, 500 million, and Clearpool around 200 million. Next, this one is a huge one. But out of all of these, it would be my first to hold for the long term. If you said I had to hold one for 5 or 10 years, it would be Chainlink. Now, Chainlink, 15 billion, market cap with a 21 billion fully diluted value. They are the glue. So I have them in the mechanic category, if you will, because they interact with everything else. An oracle that brings data online, whether it be through APIs, you name it. Think of Chainlink as connecting blockchains to real world data, APIs, payment systems. You can't operate these blockchains in a vacuum. They've got to interact with other systems, other blockchains, real world asset data, you name it. So this is one of those that I think kind of fits in that category of when people say, do you want to be out there mining for gold, or do you want to be the one selling the tools to those that are mining for gold? So I look at Chainlink as, again, as a mechanic that's helping everyone in the RWA ecosystem. And to me, 21 billion, even though that sounds like a big number, I think is nothing considering they are the first mover in this category. And I don't see anyone even coming close to doing what they've done up to this point in time. Here's Chainlink. You can go to their website and learn all about it. Fascinating. Okay. So those were the 5. Let's look at the pricing and then I'll give you my wild card. Plume here is around, doesn't really matter what it's at, 10 cents. We know what the market cap is. It hasn't had a lot of price appreciation, really waiting for altcoin season to see if this is going to start to move. I don't know where it could go, but I could see this easily being 5 to 10x. Of course, some of these could do way more. We don't know. Ondo, fairly large market cap already. However, looking at what it's done in the past, it wouldn't surprise me if even Ondo, which is currently around $1, could even get up to $6 or $7. Wouldn't surprise me at all. Syrup and CPOOL. Syrup had a token change. It's pretty much sideways, but I want you to notice this volume was astronomical when it started to run up here in May time frame. And you want to see volume push prices higher. And the volume has not slowed down. Even while it's been going sideways for 2 months now, the volume still has been on an uptrend. And that's what you want to see. If the volume is going to continue to push up when its price is moving sideways, that gives you more confidence. Of course, you want to use multiple indicators, but volume always precedes price. And if you got the volume pushing, you're going to see the price move. All of these, I think, could do 5 to 10x, no problem. CPOOL is around 20 cents. That was a smaller market cap. Where it could go, I think CPOOL could do extremely well here. So $2 from 20 cents at 10x, I think would be no problem. Chainlink, I really have no idea. It's one that I own. You can see the volume this year has been phenomenal. This has pretty much been up since down here. Even though the price came down during this time frame, this is what you want to see for future growth. Pricing coming down, volume going up. So is it any surprise that after it went sideways, it started to revert? Not at all, because the volume is still pushing it up. Where this one goes, I don't know, but we're in a bull cycle, as far as I can tell, about to go into an alt season. And once we do, if things really rocket, like most people, I'll be taking profits. And then as prices come down, I'll be grabbing a handful that I want to hold for a couple years. And this is going to be one of them. Here is my wild card, Redbelly Network. Redbelly Network, tokenizing on top of their layer 1. Now they're more of a road out of Australia. They have some patents. They did it in conjunction with University of Sydney, I believe. They had this crate. You can go to the website and look. I've got many videos on what's being tokenized. They have 4 main companies using them at the moment that have actually tokenized quite a bit. They had this crazy run up at the beginning. I think they had some issues with sell-offs of some of theirs, and it came back down here in 25. It's just been going sideways. If you look online on social, people just are really mad at the way the price movement went. It's been going basically sideways for a while. The volume is terrible. I can't figure out why. I think I wouldn't. Again, you have to make all your financial decisions yourself. I'm not a financial advisor. I'm not telling you what to do. On this particular one, while I do own some, I would not get in right now. I would wait to see if this volume starts to move. But who knows? Things can run fast. I think this has a lot of potential to really take off. And if you look at, there are 2 sites, RWA.io, this one, RWA.xyz. XYZ seems to have more data, but both of them are trying to pull in as much real-world asset tokenization data as they can. RWA.io has Redbelly Network on it. And if you look at asset class breakdown by blockchain, Redbelly Network shows 55 billion. Ethereum is next with 15 billion. That's substantial. I will tell you that the majority of that, there's 4 different companies, is one of 4, and it's carbonized credits. Don't know if that makes a difference to you, but it's not 54 billion of tokenized securities. I think those 2 things are vastly different, but I still love and I'm still interested in Redbelly. Hope this was helpful. I hope we can all make generational wealth together with crypto. And please take a listen to my crypto school. I'll explain it here. Thanks for watching. Love how I break things down? Then hop into my crypto school. You'll get step-by-step courses on everything. Buying, selling, staking for yield, borrowing, lending, even going fully debanked. Plus, join lively crypto chats and catch my daily market updates. And lastly, if you just want to help support the channel, there's a join button just below this video.